All right, everyone, we appreciate you guys taking the time to be here today. Welcome to the Trading Pub. I'd like to thank you guys, especially for being here. It looks like today is probably going to be our most heavily attended event ever. I'm trying to add some space to the room as we speak. It's just now 9 o'clock. We've got about 865 people in here. So again, real quick, if you can type in before you get started, type in where you're joining us from. Looks like looks like about every city in the U.S. and Europe's covered. So again, it's always fun to see. Type in the city you're joining us from. From a cave. You must have a good internet down there, huh? Huntsville, Alabama. All right, good deal. Very cool. Well, we'll go ahead and get started. Just what I'd like to do is welcome you to the Trading Pub. Very cool, Thailand. I'm actually headed over to Thailand in April, so I have to catch up with some of you guys. All right, real quick, give you a brief risk disclaimer. You guys have seen this before. You'll definitely see it again. But there's, in case you didn't know, there's risk involved in the market. I know, a big shock to a lot of you guys. But anything you can do to make money, you can also lose money. And so it's important to understand that. There's no holy grail, nothing that's, just going to turn your computer into an automated ATM machine. And, we typically stay away from the guys that try to sell you on that. So we're all about free quality education. We work with very reputable people, and again, we appreciate them taking time out of their day to join us. To tell you a little bit about the Trading Pub, the mission of the Trading Pub is to provide a place for our patrons where they can hang out with some of the top traders in the industry. The pub is the place to receive quality education, all while interacting with traders and investors who are just like you. Throughout the Trading Pub, what we want to do, we want to share free education with you guys, and we work with top traders in the industry. So we've got some excellent traders. It could be traders from big companies. It could be traders from small companies. It could be U.S., London. We had a guy from projecting from India. A friend of mine, Marcello, came on from India on our last Saturday webinar. We actually even had Jake Peavy, if we have any White Sox fans in the crowd. We had Jake Peavy on our last Saturday class talk about some of the things that relate with baseball and trading. So again, we try to bring in a diverse crowd that gives you guys education. Everybody wants to trade well and make money. We also want to do good with the money that we have, and so 10% of any revenues generated through tradingpub.com are given to charities benefiting inner city revitalization and workforce development. So definitely encourage you guys to give back to others. But yes, a question, do we archive these webinars? We are recording. We'll post a copy of the recording on our website. It's tradingpub.com. For those of you that are in the Twitter sphere, if you go to twitter.com/tradingpub or facebook.com/tradingpub. So again, you can stay up to date with us there. I think we passed the 35,000 like mark on Facebook earlier this week. So if you want to click on that screen, basically what we do is we post kind of some breaking news, free education, free videos, downloads, PDFs, whatever free tools we can get our hands on that we find valuable, we pass on to you guys through that. We started Trading Pub in July of 2011. All right, let's get down to the rules, okay? If you have an echo, Gary, you might be logged in twice. So again, that's important to check that. You might be logged in twice if you have an echo. If you have any issues today, like audio or issues with not seeing a slide, you can try to hit F5. So again, if you try to hit F5, that will typically take care of any issue you might have. All right, so rules of the road. We're very laid back. If you've been to a Trading Pub event before, real quick, type in yes or no. How many of you guys have been to a Trading Pub event before? Type in yes or no. Okay, good deal. We've got a really good mix here. But if you haven't been to a Trading Pub event, this is really our only rule. It's all about good quality education, but you have to be polite and considerate to the people, not only in the room, but also our presenters. So you don't want to be this guy on the left. We've got some excellent people taking time out of their day to share about the markets. So if you're going to be here, all we ask is that you be considerate. If for some reason one of the speakers is saying something that doesn't really strike a chord with you, you know, all you have to do is log out. Mike, the music keeps coming. You might want to try hitting F5 if you're still getting music. But again, if for some reason the speaker's talking about something that's not really for you, all we ask is just that you log out and enjoy the rest of your day. If you're going to be here, you want to be that guy on the right, be cool, enjoy your time. All right, you guys asked for a copy of the speakers. Here you go. We've got Ross Mullins kicking the day off. I'm about to turn things over to Ross. Then he's going to be followed by Steve Bigelow of Candlestick Forum, Charlie Finn of DTI Trader, Doc Severson of Trading Concepts, Fausto Puglisi of Cyber Trading University, and then Ray Stein of Ninja Trader. So again, we appreciate you guys being here. There's 1,000 people in the room. The speakers are going to do the best they can to, they're going to do the absolute best that they can to help with questions. And again, we appreciate you guys taking the time to be here. So Ross, at this time, I will turn things over to you. This will last about 3 hours. Each session is going to be 50 minutes, and we'll put a timer up to try to keep them in line. They're going to try to do 40 minutes education and about 10 minutes Q&A. So, and then we'll give you guys a link where you can follow up with them after the presentation.
Thanks, Morgan. You going to go ahead and bring up that PowerPoint slides for me?
Yep. Okay. So we've got Ross's slides coming up, and here's the deal, guys. There's a lot of people in the room, and so if for some reason it's going to probably take things a little while, but if for some reason you don't see the slides, you can always hit F5, and that should be able to get them for you. So Ross, I'm not sure if they're loaded on your end yet, but they should be.
Yes, I can.
Should be coming up soon. Okay, so guys, if you can't see Ross's slides, and you guys help me out too, if you see people type in saying I can't see slides, just let them know to hit F5. All right? Yes, recording will be available. All right, Ross.
All right, thanks, Morgan. Before I go any further, I want to take a moment to say thank you to Morgan, of course, and then for Trading Pub for giving me the time to take some time to be with you today, and for you to taking time out of your busy lives to join me here today. And I'm excited and grateful for this opportunity to get things kicked off. So just a little bit about me before I continue. I have been trading the Forex exclusively since 2002, focusing all my attention on this market. And for the past 5 years, I've been providing daily market analysis for 7 of the major currency pairs through Forex Daily in a live trading room. And I saw beforehand Morgan asking what kind of markets everybody trades, and there do you consider yourself a day trader, a swing trader, or a long-term trader? Just kind of what type of trader would you consider yourself? Day trader, swing trader. Looks like, again, we have a pretty diverse crowd. Day trader, long-term. I see lots of diverse crowd here. Just another question. Let me throw out another question. How long have you been trading, if you are trading, and are you making money consistently? How long have you been trading, and are you making money consistently? Lots of years, 8 years, few months, 2 years, 5 years, and a lot of people saying no to making money consistently, and that's pretty much something that I see across the board a lot of times. And we got a diverse crowd here. So I'm going to ask you one more critical question. Now, do you desire the knowledge to be consistently profitable trader? In other words, do you want to make money? And, you know, the answer to that's going to be simple. Everybody's here to learn something. Everybody's here to gain some knowledge and to make a little bit of money. So what I'm going to do is I want to take some time to show you a basic strategy of trading, especially what I consider trading in the Forex, that I use in the market every day to make my decisions to go long or short or get in or out of the market. So here we go. Over the next several minutes, I'm going to walk you through a simple strategy that I put together that I think anybody can understand, no matter really which market that you're trading or your experience level. And you could even put it into practice as soon as the trading day begins. So let's take a look, first off, at this quote from Confucius. He's been quoted as saying, "Tell me and I'll forget. Show me and I may remember. Involve me and I will understand." You see, trading is an activity, not just a spectator sport. You must roll up your sleeves and get your hands dirty, so to speak, to really understand what trading is all about. And until you do that, you really can't truly understand what it means to be a trader. No matter what strategy you decide to employ in your trading, it will be a critical practice. It will be vital to apply it practically to the market on a daily basis. So let me be clear, trading and of course technical analysis takes some time to master. First, you have to develop a strategy, either on your own or copy somebody else's, and then you have to master that strategy. Ideally, before you build a strategy. Well, what I found out early on, and of course mostly by trial and error several years ago, is that there's an overwhelming amount of trading information out there, and it's a daunting task to sift through it all. So just take a look up for a moment at this list of trading indicators or technical indicators that are available. Now this, of course, is not every indicator out there, and there's multiple variations of all of these. So just how do you decide which ones of these indicators to use? Because you could spend months or even years trying out each one of these, and you might have some success with some of them, but more than likely, you're going to have a lot of failure. Now, I'm in no way saying that all of these are bad, because used correctly in the right market, each of them has some value. But just think, if you tried to apply half of these to a chart, you could barely see the candlesticks or the indicators on the chart for all the lines and the bells and whistles. So how do you whittle this list down and begin to develop a winning strategy? And I would say that there are two critical factors for making money consistently in Forex trading specifically, but really in all trading. First, my suggestion is to keep it simple. Pick a few of these indicators that are available. Now, this could be 2 or 3 or 5 of them, but pick ones that make sense to you and then master them. You see, it's going to be better to master a few indicators than be a slave to too many. And when choosing the indicators that you're going to use, pick ones that are well known and that lots of traders use. First off, because you will find more training and information about those ones that a lot of folks use, and you'll find more information about those than the lesser used or known indicators. And secondly, there's a reason why they're common and widely used, and usually that's because when used correctly, they work. So don't try to invent the wheel. And when you finally settle on a few indicators, master them. Become their friend. Get to know them inside and out. The better you understand how they work, the more useful they will be to you. So when you've settled on a few indicators and develop a strategy around them, be consistent. Employ the strategy the same way all the time. Some people think being consistent means that you're going to win in every trade or almost every trade, and that's not really what consistency means. Even when you are a consistent trader, you will and can have losing trades. So you must develop a strategy that works consistently over time. Now, trading is not just one trade or 10 trades for that matter. Trading is something that you work at over dozens or hundreds of trades. And if you follow a similar strategy over time, now that's going to be consistency. So I want to show you what I mean by this, about developing a simple trading strategy that you could use today, using common indicators to be consistent over time. And I call my strategy the speed bumps and barrier strategy. Now, first off, there is an analogy that I want to use to help you understand the concept of this strategy. Imagine you're driving your car into a large parking lot and you start to accelerate. Well, after you make the turn into the parking lot, you come upon a speed bump. What do? Well, if you're like most traders, or drivers I should say, you will slow down until you get passed over the bump. And now what happens on the other side of that speed bump? Well, more than likely, you're going to hit the gas and move on. And then, of course, you're going to come to another bump. You're going to slow down again. And again, after passing the other side of that speed bump, you again accelerate. And this is going to continue until you make your way all the way through the parking lot. And unless you're driving a tank, you're eventually going to come to a barrier. That means you're going to have to turn around and go back the way you came from, or at least turn and make your way around that barrier. So what all of this boils down to is that a speed bump is a spot in the road where you might slow down for a short period of time, but once you've made it past that speed bump, you continue on the previous path or direction. Now, a barrier is some obvious stopping point in the road where you will have to either turn around and go back the other way or turn and find another way around. So you're probably asking, what has all of this got to do with trading? Just give me 1 second here. I want to make sure. Apparently, my slides aren't showing.
Hey Ross, you're good. You're
Okay, everybody's seeing them. I'm going to continue on. Uh, Again, so you're probably asking what all this information about speed bumps has to do with trading. So let me get into the strategy of speed bumps and barriers. First off, when I develop my trading strategy, I stick with the major currency pairs. I look at them somewhat like indicators, and there are a lot to choose from, and some of them are more volatile than others. Some have higher trading costs, some will make you more money per pip than others, but each has its own personality. All of these currency pairs has a personality, and it might even be that you just want to stick with the currency of your homeland, and that's fine, but pick the ones that work best for you. Get to know the personality of each of the pairs. However, whichever pair that you choose to trade, the trading strategy that you apply to each pair is going to remain the same. So then you apply the indicators of choice. And for simplicity's sake and the sake of time today, I'm going to just discuss these speed bumps and barriers as a support and a resistance. Now I know these seem kind of basic, but these are the classic speed bumps in the market. However, there's many different indicators that you can use to identify these levels. First off, of course, we could simply draw a horizontal line to represent historical levels of support and resistance, but that's just the beginning. And additionally, you could use tools like Fibonacci of support and resistance. And if you're not sure what I mean by that, you're going to have to find out on your own, because we just don't have time in this webinar to go over all the intricacies of Fibonacci. That's another can of worms for another day. Anyway, you could choose pivot point levels to calculate potential support and resistance, and this uses historical data from the previous day. Or you could use a multitude of variations of moving averages to project to use. They all primarily do the same thing. They identify potential barriers or bumps in the market. And these are fairly easy to identify once you know what you're looking for, which in turn is going to make them a widely used common indicator. And what I like about support and resistance is that you could look back in time, days, weeks, or even months, and sometimes years, and find that the market has recognized these levels over and over again. So as with any speed bump or barrier, there's going to be two main potential scenarios for these types of things. And these are going to be the key decision points that you will need to recognize when you are deciding to trade or no trade. First, when the market reaches one of this is where the market is going to stop or stall for a period of time, maybe short or maybe long, and maybe even reverse and go back in the opposite direction. That's the first scenario. The second scenario is that it will potentially break that level. And this is when the market passes through one of those speed bumps, gets on the other side of the speed bump or the barrier, and then continues in that direction that it was previously moving, or in the direction maybe even of the trend. Now I think the best way for me to explain all of this is go to the actual charts, go to live charts. So let me see if I can switch my screen over to my live charts. Give me just 2 seconds to try and get this pulled up, and when my charts show up, let me know if you can see my charts. Just let me know when they show up. All right, looks like they have shown up. So I'm looking at a chart here. This is a Forex chart. This happens to be the Euro USD, the Euro versus the US dollar. I'm going to start on the daily chart and kind of work my way backwards. And this is what I do on a daily basis in my live trade room that I have. First off, I'm going to recognize some barriers based on horizontal levels of support and resistance. So I'm just going to draw a couple of lines here. First off, in the current market, this of course is Saturday, and the market's not live at the current moment, but this is current as of yesterday, Friday. And we can see that yesterday and over the past few days, we have found a resistance or a barrier here that the market's had a difficult time passing through. Well, how would we know that the market was going to have a difficult time passing through this barrier? And I would suggest that all you have to do is look back in time. So if you follow this backwards, you look all the way back to the left-hand side of the chart, all the way back into the February and March timeframe of 2012, we would have known this was going to be a barrier just by looking back in the past. So as long as it stays underneath that level, which that black line sits at 1.3383, 1.3384 in that price level, as long as it stays underneath it, that is a barrier that the market is having a difficult time getting above. So at that point, the buyers that were in the market, it was going up. The buyers, signified by those blue candlesticks there, came to a screeching halt, and the sellers are able to keep them from driving it higher. Now, if the buyers are able to get it above that speed bump, if the market, what do you expect to happen? Well, if the market gets on the other side of that speed bump, we're likely to see some acceleration and a continuation in the direction of the trend, which at the current moment has been up for several weeks, going all the way back into the middle part of 2012. Now, where does it go if it breaks above here? If it gets above this speed bump, think of that black line as a barrier or speed bump, where do we expect it to go if it goes above that level? And all we have to do is bring our next line in here, and that's where we expect the market to go. Why do we expect it to go there? All you have to do is follow that back to the left-hand side of the chart, and you can see that's exactly where the market went to the last time. So if we get an open and close, think about this with a speed bump. Think about your speed bump. You're driving your car. At what point do you accelerate on the other side of that speed bump? At what point, when you get on the other side of that bump, do you accelerate? Do you do it when your front tires get on the other side of the speed bump, or do you do it when all four tires get on the other side of the speed bump? Well, most drivers wait until they get all four wheels, all four tires on the other side of the speed bump and continue in that direction and accelerate in that direction. So that's what we're going to wait for. We're going to wait for all four tires, or in other words, a full candle body to get on the other side of that speed bump to indicate the fact that we're going to accelerate beyond that to the next speed bump. And the same thing goes on the bottom side. Now, we can identify this area right here as a speed bump also at 1.3275 underneath the current market. As long as it stays above that speed bump, there's potential for it to continue to pressure higher. If it gets underneath that speed bump, we would likely look for it to continue to pressure lower. So we're able to see where these classic bumps in the road are on a larger scale here on the daily chart. And then, of course, if it continues to pressure lower beyond that speed bump there at 32.75, we would look for it to go to the next area of congestion or that next bump in the road. And beyond that, we could even look for it to go even further down to the next bump in the road. So what I'm trying to get you to understand is people act in a consistent manner. Traders act in a consistent manner, and they're going to follow the same rules in most of the time in the same manner and consistently. Where did the buyers come to a stop? Did the sellers begin taking back control? At that same place they have historically back in time. We could also begin looking for different clues to these speed bumps, and I've identified these using horizontal levels of barriers or speed bumps, but we could also use diagonal levels of barriers or speed bumps. We could begin looking for trend lines that help us identify diagonal levels of barriers or speed bumps. So now we're starting to see those bricks in the walls overlap on top of each other. Not only do we see historical levels of support, 1.3275, 1.3165, but now we have a diagonal level of support based visually on a trend line. So if the market comes down where those two speed bumps intersect, whether it's the trend line or the historical support or resistance, we're likely to see some more support. And if it does find support there, we're likely to see it bounce at that level. Because if this becomes a brick in the wall, let's think of these lines as bricks in the wall. If the diagonal trend line is a brick in the wall and the horizontal support and resistance is a brick in the wall, the more bricks you get in that wall, the more likely it is that you're going to look for a bounce at that level rather than a break to get back underneath it. Now that we've identified these levels on the daily chart, I'm going to go down to the 4-hour chart, and the same thing happens down here. We're going to identify these levels as support and resistance. We're going to identify these levels as the place where buyers are jumping out, sellers are jumping in, sellers are jumping out, buyers are jumping in. Each one of these barriers becomes a level in which there's a battle going on. When the market rallies back into the 1.3380 85 level, the top black line there on the chart, when and if the market rallies back into it, we expect there will be some resistance there. Well, when there's resistance there, what you're going to be doing is looking for opportunities to trade. We know that if the market rallies to 1.3383, there's resistance there because it historically has shown to be resistance, and that gives us opportunities to trade. It tells us when it reaches there, we're looking for candlestick structures. We're all, many people that have used candlestick charts like these are familiar with candlestick structures. You could look for, or charting patterns for that matter. I've seen some folks posting about charting patterns. You could look for patterns of reversal that tell you it's going to go down. You could look for candlestick structures that tell you it's going to go back down. The shooting star into a resistance barrier or into a support barrier. When it reaches down into 1.3275, we know that there's potential support there. All you have to do is look back in the past. We know that historical resistance helps us identify support, and that's exactly what's happened here. So how do we know when it's going to be a barrier which is going to cause a bounce or reversal, or how do we know when the market is going to actually break through one of those? And that's a good question, because we can't know that for sure, but what we're trying to do is understand where the most low risk, high reward scenarios are. That's really what it's all about with trading in general. You're looking for low risk, high reward scenarios. And how do you know where those lower risk areas are going to be? It's where the market has found these barriers before. So if you're looking to buy this particular currency pair, and I'm looking here at the euro dollar, but this could translate to any particular currency pair. I could erase the currency name off of this and just really, this could be any pair. It could be the franc, it could be the pound dollar, it could be any currency pair because the strategy. So where's your low risk scenarios? In the direction of the trend, you have two opportunities to trade in the direction of the trend. So you're either looking to buy on dips into support barriers or breaks above resistance barriers. If you're looking to counter trend trade, if you expect it's reached its peak and you're looking to go down, your lowest risk, highest opportunities to trade on a sell scenario are sells on rallies into resistance or sells on breaks of support. So those are the types of things that you're looking for when you're looking to enter the market. Whether it's resistance or support, you're looking for a bounce or a break. So as it reaches, if you're looking to sell this, as it reaches into that top barrier, 1.3380, you're looking for candlestick structures, an engulfing candle, a shooting star type of candlestick to imply that reversal is going to send it back down. Then if it does go down, you're looking for your next support down here. How do you know that this is going to be a breakout? How do you know it's going to be a breakout? That's a good question. And really, for me, it's just about going back to that speed bump analogy, just like that speed bump analogy. As we can see, there's a few wicks. There's a few times when the market's got above this 33.83 level. There's a few times when the market got below it. And even over here, if we take this area right here, and I'm going to highlight this to make it easier to see, this area right here in the blue zone, look how many times the market got above that black line at 32.75. We see 1, 2, 3, 4 times it got above 32.75 and did not break and went back down. Well, just like your speed bump analogy, when do you expect it to break that speed bump? When you get all 4 tires or all 4 wheels on the opposite side. So as long as it does not get all 4 wheels or all 4 finding a resistance there or a barrier and potentially going back down. So you're looking for candlestick structures and charting patterns that imply reversal from this level as long as it does not open and close back above that level. So then once it finally does open and close above that barrier, then you expect it to continue to pressure higher. So when did it finally do that? If I drag this blue zone over here, we can see that it held underneath that line even here. This is the 4-hour chart. So each one of these candlesticks is a recognition of 4 hours of time. So we see 1, 2, 3, 4, 4-hour candles there. 16, 12, 16 hours that the market held underneath 32.75 on the 5th attempt. Finally, we see the break of that level, the open and close above it, telling us that that level has been broken and that now that resistance barrier will likely be a support as the market holds above it. So since we have broken in the direction of the trend, broken above this barrier, open and close above it, then that becomes a buying opportunity. So then you're going to begin looking for buys into supports into that same level. So once it opened and closed, full candle body, all 4 wheels got above the speed bump, you then expect it to continue to pressure higher. And that's exactly what's happened really for the past week or so, where we saw it pressure back into 33.83, fell back into support, which was now recognition of that as a barrier, and push back into here. Same thing goes. As long as it stays above that blue shaded area, then we're expecting that it can go back up in the direction of the trend. So I'm looking for buying opportunities on dips. I'm looking for buying opportunities in the direction of the trend based on this current support that we're seeing. That will be invalidated when it breaks underneath there. So if the market opens and closes underneath 32.75, all bets are off on the buy side, and I'm going to begin looking for exits on any sells and entries on any selling opportunities that I see. So if I see an open and close now, a full candle body underneath 32.75, I'm beginning to look for selling opportunities at that point. A full candle body underneath 32.75, begin looking for selling opportunities. On the upside, if it gets back up into the 33.83 level, and I'm going to highlight this also, because this is going to become an area that we want to pay attention to in the direction of the trend. I'm just going to change it to a different color. Let's change it to this gold color. This gold color is our resistance barrier. It's a resistance speed bump right now. How will I know when that's going to be broken and we're going to continue to see this going up in the direction of the trend? Well, I'm going to know that when a full candle body gets above it, just like over here. So just like when it broke above the blue zone and continued higher into that resistance, the same thing happens over here. If we get a break above that gold zone, break above that barrier, I expect it to continue higher. But until then, the gold zone, the blue zone are the battle zones. That's where at the blue zone, this is right now where the buyers are keeping the sellers from taking control of the market. The gold zone is where the sellers are keeping the buyers from keeping control of the market. So in both of these areas becomes trading opportunities. We could take, now that we understand that there's a barrier or resistance into the gold zone or a barrier or support into the blue zone, we take that information and we begin drilling down to our next compressions. Here we are now down on the 1-hour chart. Each one of these candlesticks now represents a 1-hour time frame. And now we can begin honing this in and really looking for an intraday type of trading strategy. An intraday type of trading strategy. We can even hone these lines in a little bit, looking for a little bit more precision here with these lines. I'm going to move that line now to 33.89, 33.90. Because why? We have not seen a full candle body break above it here on the 1-hour chart. They're into that gold zone. So as long as we don't see that, there's potential for it to fall back down. So when it makes it to the gold zone, what are we looking for? We're looking for indications of reversal. We're looking for shooting star candlesticks, engulfing candles, those types of structures that imply the market's going to go back down. When it makes it to the bottom, into the blue zone, which is a similar situation. In fact, I'm going to hone this line in. I'm going to bring it down to 1.3267. As long as it holds above 1.3260, imply that it's going to go back up. If at any point we see a full candle body break underneath that blue zone, all bets are off on the buy side, and I'm expecting it to go back down. So where are our trading opportunities right now? Where's your lowest risk, highest reward trading opportunities here for the euro dollar? Well, at the current time, your lowest risk buy opportunities are down here into the blue zone. So right now, so as long as it holds above the blue zone, we're looking for buying opportunities in the direction of the current longer term trend. If it breaks underneath that blue zone, then we begin, it goes up here at the top. We could say the same thing about the gold zone. As long as it, if it ever breaks above the gold zone, opens and closes above that barrier, just like a speed bump when you're driving your car, you don't expect acceleration higher until it gets above there. So as long as it holds underneath it, you're looking for clues to reversal to go back down, or if it breaks above it, open and close, we expect it to continue to pressure higher. Same thing on here. I could put an arrow here. Just these arrows are helping me identify these barriers as my trade decision. So up there in the gold shaded area, the gold shaded area at the top, that becomes my lowest risk, highest reward opportunity. Why is it low risk? Because if I sell it into that gold zone, my risk is just above it. My risk is that it breaks above there and continues to go up. So when it makes it back to the gold zone, I'm going to begin looking for opportunities to sell it with low risk, stops just above it. My stop loss are just above that gold zone and above the previous highs. If it gets down to the blue zone, same thing goes. I'm going to look for buying opportunities, and my risk is just underneath that blue zone. Now I can take that same information from the 1 hour chart and continue to drill down. If we continue to drill down, we go down to smaller compressions. We go down to the 30-minute chart. Now, that larger view of the trend has now starting to disappear. It's starting to disappear. We don't really see that larger view of the trend, so that's why we don't want to forget about that. Let me go back out here to the daily chart again. What is the trend? The trend in this case, and the trend has been since last July of 2012, the trend has been up. We saw our first leg of the trend pushing here into the 3100s. It made a little bit of retracement, and now we've seen a push all the way up towards the 1.3400 level. What is the trend? I don't think the trend line is the trend. Let me just define the trend for a moment for you. I don't think the trend line is the trend. The trend line is just a visual representation of the trend. The way I define a trend is higher highs and higher lows is an uptrend, lower highs, lower lows is a downtrend. So as long as we stay within that definition of an uptrend, we're continuing to see higher highs, we're continuing to see higher lows, that's the direction I'm going to focus all of my trading efforts in. Okay, all my trading efforts are directed in the direction of the trend until I see something change, until I see clues to reversal, could be candlestick structures or charting patterns that imply reversal, or simply an opportunity with a low risk, high reward scenario. So my trend is up. So where are my best trading opportunities within the trend? Even if I go down to my smallest compression, let's go down to the 30-minute chart. My lowest risk, highest reward opportunities are down towards the bottom of that range, if you want to call it, between the gold zone and the blue zone there. As it dips down to the blue zone, my stops are just underneath it. I'm looking for candlestick structures that imply reversal to go back up. I'm looking for formations that imply to go back up in the direction of the trend. So this blue zone becomes the barrier on the bottom, the gold zone is the barrier on the top, and each is representing a barrier there. We expect it could reverse. If it ever breaks through that barrier, opens and closes above a resistance or below a support, we could see it turn around and go right back in the other direction. And again, these types of strategies are going to apply no matter which currency pair you're looking for. Again, I'm only concentrating today on the euro dollar, but the strategy is going to remain the same. You're looking for these horizontal levels. I like to highlight them in these colors just so I can really see them, so they stand out to me and I can really see them. And I could continue to do this over and over and over. If it breaks underneath the blue zone, where's the next bump in the road? Where's the next area where I expect will be support or a break point? And that would be down here. And I could just color it in a different fashion so we know where that is. So if it breaks under the blue zone, where's my next area to go for? My next area is down there into the green zone. The good news about that is that's also where the trend line is going to come into play, the longer term blue trend line that we see there, adding another brick in the wall. We could even go down to smaller compressions and continue looking for this. If it breaks above the gold zone, where do I expect it to go? I've already identified this into the 3460s. And again, we could throw other tools into the mix here. I've only used horizontal support and resistance. I've only used a trend line here, but we could begin looking at Fibonacci also. Fibonacci helps us identify naturally recurring patterns in the market. And I want to make sure it's connected exactly to the low there. Fibonacci helps us identify naturally recurring barriers in the market using Fibonacci. So as we can see, it's come down off of the highs. Where is our barrier, our Fibonacci barrier? Right there into the 1.3260s. We see these dashed lines, and I got the dashed lines there to help us identify these levels. 3260 is our first fib level that we come in contact with. Then just below that, the 50% retracement of that same trend range that I just drew is 1.3219. That's right smack in the middle of that area or between the two major barriers that we've identified. The next fib is down here into 1.3175. So again, that becomes naturally recurring barriers based on those Fibonacci levels that if you've studied Fibonacci at all, we know that they're naturally occurring barriers identified because the market tends to work in these natural patterns. So we've identified the blue zone as a barrier in the market. Prior to adding Fibonacci, we throw Fibonacci into the mix, that becomes another brick in the wall. Now that we've returned back to that Fibonacci retracement level into the 3260s, if it goes back in the direction of the trend, where do I expect it to go? I expect it to continue to pressure higher into the next Fibonacci extension levels, which the 1.27 sits up there close to 1.3500, which is just a little bit above our current resistance barrier, our next resistance barrier above the gold zone. Or we could even see this rally all the way back into the 1.618 Fibonacci extension into the 1.3600 level. So we already have some ideas where our next naturally recurring patterns will be if the market continues to pressure higher. So it's really going to show us how much higher it can go using the tools of Fibonacci, using the tools of resistance and support, and we can tell us if it goes back down and starts to reverse the trend, where's our next barriers down. So a break above a resistance, we expect it to go higher. A break below a support, we expect it to go lower. Until then, we could begin looking for trading opportunities between these barriers or in between these levels of support and resistance in the long run. Now, I know I've thrown a lot of information at you, but I think the market that you're trading, whether it's Forex or any other market that you can recognize price levels using support and resistance or candlestick structures, but it's a simple strategy that I think that anybody can begin to hone and practice and understand where these levels come from. So let me switch back over to my slideshow real quick. Give me just a second. I'm going to turn the chart off, and I'm going to switch back over to the slideshow. If you could just let me know when the slides come back up. Are my slides showing? Yep, they're up. All right, so back to our slideshow. Let me go ahead one or two slides here. So let me just boil all this down. The trick into using any indicator like support and resistance or Fibonacci or trend lines is to use them correctly and use them consistently. Trading is going to be about probability. The more indicators that you can use that are going to point to a particular outcome, the higher the probability that that outcome will occur. So at the beginning of the presentation, I suggested that you pick a few indicators to master. And that's because they work together to point to a single outcome. Your confidence is increased in that outcome. Now, if you have two indicators pointing up and two indicators pointing down, it's going to be a 50-50 shot. But if you have 3 or 4 pointing in the same direction, that's when probability is increased. Now, you can think of all of these indicators that I've pointed out or any other indicator as bricks in a wall or a barrier. One brick doesn't make for much of a wall. 2 bricks is good. 3 or 4 bricks in a wall, even better. And I think you get the idea. The more indicators pointing to the same conclusion, whether it's a buy or sell conclusion, the better. So now, picking out support and resistance like I've done today, and even trend lines for that matter, or Fibonacci, is often more of an art than a science. Finding exact levels is rarely going to happen. Now, more often, it's going to be a level of consistent congestion that you're looking for rather than a single candle or wick. It's a level of congestion that you're looking for when you're trying to artistically identify these levels of support and resistance. And you'll probably hear different traders, even today, that use these methods in a different way and identify and draw these lines in a different method or different way. And that's okay. So what I would suggest is that you find a methodology that's going to work for you. Whichever indicator that you settle on, find a methodology that best represents what that indicator is trying to identify, whether it's volume or momentum or trend or whatever, and be consistent with it. If you constantly change the way you use an indicator, it's going to diminish its value. So right now, we're back to where we began. Typically, my day works like this. I'm using my method. It starts with the larger compressions, just like what I've done today. Most of the time, I start on the daily chart because the weekly only changes really once a week. I will identify the most current trend, the closest support resistance that have the most impact or potential to impact my trading during that day. I'll then move down to the 4-hour like I did today and do the same thing, keeping in mind that the trend on the 4-hour could be a little bit different than it was on the daily. And then once again, try to find the closest support and resistance barriers or speed bumps that will have an impact on that trading day. And then I continue to drill down to the 1-hour and the 30-minute chart and do the same exact things just like I did today. Now, it's been my experience that any of the lower compressions, just the 5 or 15-minute chart, could fool me into false breaks or scare me out of good trades rather than trusting my signals. So I rarely, if ever, do I go below the 30-minute chart. Now, once I've identified the main trend, the directional focus, and the barriers that I find significant for the day, just like any other trading, it becomes a waiting game. Most of the time, trading is waiting for a level to be reached or the most high probability, low risk, high reward scenarios before entering or exiting a trade, and waiting for the right signal or opportunity to develop. However, trading is going to be an activity, not just a spectator sport. You must actively participate in the market on a daily basis, or at the moment when the price and indicators converge and the opportunity arises, you might miss it. And this is hard sometimes for you to do if you don't know what you're looking for. You just have to spend the time and devote time studying the market. Now, how do I do this? Because how do I know all of this? Because I've been there. Years ago, I was sitting in front of my computer and looking at the charts and asking myself, now what do I do? So again, we're right back to where we started at the beginning of this example. Back to Confucius. Tell me and I'll forget it. Show me and I may remember. Involve me and I'll understand. Learning to be a successful trader is going to be a journey, but certainly worth the time and effort that you put into it to get to that, to get you to your destination. So I've been talking a lot today, and I know you might have a lot of questions. I've seen a lot coming through. Before I go further with your questions, I just want to say Forex Traders Daily has put together an offer for you to take advantage of my trade room and my video service and take it for a test run. So by using, let me go ahead one spot here. By using this special link that we've put together for you today, you can register for a 10-day free 10-day trial of my premium daily expert analysis videos in the live trade room. So this is what you're going to get if you click that for the 10-day trial of my trade room service. You're going to get in-depth Forex analysis provided through a video on demand on a daily basis on the members website. I'm going to go, during those videos, I go through all 7 major currency pairs for every day on a daily basis. On the videos, I'll go through how I find the support and resistance levels that just like I did today and how they will affect the market for that trading day. Also, you'll get access to my live trading room. I have a live trading room on a daily basis that I talk about these things and discuss these types of indicators. In the trade room, you can basically look over my shoulder as I show you how to arrive at my trading decisions. You can also, during the trade room, ask questions about specific trades or discussion about the methodology that I'm talking for. And you can access this 10-day trial for $14.99 today by clicking on that link that you see there on the screen. So that's going to really do it for me. Let me see if I can answer some questions here before my time is up. I just have a few more minutes, and I want to go through some of the questions that I've seen pop up here on the screen. I'm going to try and scroll up through a lot of these and see if I can find something. Let's see. Don't I need to ID the times? I'm not really sure what that question is about. I typically look at the daily chart, the 4-hour and the 1-hour to identify the support and resistance levels that I'm looking for. A lot of questions about the webinar itself today. How do I specifically determine the trend? Let me go back to that. That's a great question. How do I determine the trend? Well, first off, I look at the daily chart and discover the direction that the market's been going in a longer term. I identified the trend by doing this. First off, higher highs, higher lows. The simplest definition I could come up with when I was trying to define what the trend was higher highs and higher lows as an uptrend, lower highs, lower lows in a downtrend. So I'm going to start on the daily chart, develop a trend bias that I'm going to look for there on the daily chart. Then I'm going to take that down to the 4-hour chart. What I'd prefer to see is the 4-hour trend also agrees with the longer term daily trend. And then I'm going to go down to the 1-hour chart and I'm going to do the same thing. Higher highs, higher lows as an uptrend, lower highs, lower lows as a downtrend. If I see the 1-hour trend going down and the daily chart going up, all that means on the smaller compressions is that we're looking at a dip before the market turns around and goes back up. So what I'm waiting for is the smaller compression, like the 1-hour or even the 4-hour, to turn back in the direction, momentum to shift back in the direction of the longer term daily trend. So I start on the larger compressions. Higher highs, higher lows means an uptrend. Lower highs, lower lows means a downtrend. I can put a trend line there to visually represent it, but remember, the trend line is not the real trend. The trend is prices going higher or prices going lower. So the trend line is not the real trend. Higher highs and higher lows is the real trend in an uptrend, or just the opposite. What time of day do I finish my analysis of the 7 major pairs? I typically produce my videos before the 8:30 a.m. Eastern time frame, and that's all going to be Eastern time. That's the time zone that I'm in, same as New York time. So my analysis of the 7 major pairs out on video prior to 8:30 a.m. and then my daily trade room, where I go over everything in detail and answer questions about the levels. It starts at 10 a.m. Eastern time on a daily basis. Let's see. Going down through some of these questions. What are your top indicators? Very similar to what we've looked at here today. I'm going to throw in the trend lines just to visually represent the trend. I'm going to use support and resistance based on, very similar to what I did. I use horizontal lines and these shaded areas that I just drew in there to represent those horizontal levels. I use Fibonacci. Sometimes I'll throw in some moving averages because they help develop support and resistance based on the price action of a currency pair. So sometimes I'll throw in some moving averages, the major ones that you'll hear talked about quite often. Fibonacci. I rarely use pivot points. I keep it very simple because I've developed a strategy to keep it simple. I don't like to complicate things. I like to develop these most low risk, high reward scenarios. So those are the major indicators that I use. Nothing very different than what I have talked about today. It's actually, my trade room is during the New York session. It's 10 a.m. Eastern time. What are my exit rules? I'm saying that's a great question too. What are my exit rules? I use exit rules in the same way I use entry rules. Whether it's a bounce off a level or a break of a level. So if it breaks above a resistance, my exit is the next resistance. If it breaks below a support, my exit is the next support. That's my exit strategy. Now I do have a preferred method of managing an open trade. I will typically lock break even. This is my style of trading. I lock break even after 20 to 25 pips of profit. So if you're not sure what a pip is, it'll just take some time to get into familiar with Forex terminology. But that's how the currencies are measured, to the smallest increment. So if I see 20 to 25 pips, I will typically lock break even. But that's my exit strategy is typically the same reasons I get in. breaks of resistance to go up to the next resistance, break of a support to go down to the next support, or if it's a bounce, if I'm bouncing off a support to go up, the next resistance is a target. If it bounces off a support to go up, or if it bounces off a resistance to go down, that next support is my next target. Do I suggest pivot points in if a trader has problem with support and resistance? Yes, that is a fine way to identify support and resistance using pivot points, using them in the same strategy. Each pivot point, the main pivot, the resistance pivots above that, the support pivots below that, could also help you identify those naturally recurring barriers. Well, not naturally, they're projected support and resistance based on the previous day, but those are a good way to begin developing your strategy around support and resistance, or developing support and resistance based on these barriers in the market. I don't use pivot points on a daily basis simply because I can identify the barriers without them, but that is the way I do it. Now, what indicators I use, I've already gone through that. The session, no, I do not have sessions during the weekend. Sorry about that. Just Monday through Friday, 10 a.m. How do you manage the stops? Trailing? Good question. I do, again, 20 to 25 pips, I prefer to lock break even with my stop. Beyond that, I'm going to use, as in an uptrend, I'm using supports to draw I don't use trailing stops, automatic trailing stops, but I will trail the stop based on the next support levels higher or the next resistance levels lower. Let's see. I'm just trying. Do I use stochastics? I do not use stochastics. Looks like we're starting to get some repeats of questions. If I haven't answered your question, I'm sure that when you get the recording of the seminar, you'll be able to go through it and really get a clear handle on everything I've talked about. I like to keep things simple. That's really what it's all about for me on a daily basis. Take advantage. If it's just you only stick around for the 10-day trial, it's a 10-day trial for $14.99. Even if you only stick around for 10 days and get some of your questions answered, that's fine with me. I'm okay with that. Come in, stick around for 10 days, get some questions answered. $14.99. I think you'll be happy with your decision to take advantage of that through your time with me in the trade room. Again, thanks for your time with me today. It looks like my time's just about up. I appreciate everybody being here, and I'm going to go ahead and turn it back over to Morgan.
All right, great. Thank you, Ross. That was an excellent, excellent job. I don't think you could have done a better job. Great comments. We've got, I would like to say thank you to everybody in the room. I appreciate your patience. I know a lot of you guys, our room maxed out. We were working with Omnovi to get more people added, and so we appreciate you guys with your patience. But if you enjoyed Ross, just type in yes. Did you guys enjoy that session from Ross? What did you think of that first session? All right, well, very good, very good. Glad, lots of great comments. Incredible, incredible job, like I said. And basically, somebody asked the question earlier today. They said, what's everybody going to try to sell us? And today's all about education. Basically, the way that this works, if you enjoy what a speaker has to say, like you enjoyed what Ross has to say, you'd like to learn more from him. And here's a 10-day trial to his room. I'll type that in. And you guys can click on that link if you liked it and want to learn more. You're welcome to do that. Again, spend 10 days with them. And like Ross said, if all you do is just do 10 days and cancel, just try to learn as much as you can, get your questions answered. And again, we appreciate people like Ross taking time out of their Saturday to share some really good quality free education. So again, there's that link. I'll also post it as an announcement that you guys can click on, and we'll give you about a minute before we turn things over to the next speaker. I know that you guys will. Yeah, and that's the thing, that we tell people. Say, look, show everyone the value that you bring, which Ross just did, and then now you guys have the chance, if you want to learn more, it's $15 and you spend 10 days with them and get to really really find out about it. So Steve, I'm going to turn things over to you if you want to go ahead and get set up. We'll put a quick timer up there and give people about a minute to take a break. They can get signed up for Ross's $10 trial service, and then you can take it away. So Steve, if you want to get the desktop sharing going. Yes, we are recording the event, and we'll post a copy of the recording on our website, which is tradingpub.com, www.tradingpub.com. Yeah, you should be able to click the link. The next subject, Steve's going to talk about candlesticks. All right, so we'll turn